So we had this scenario here yesterday. Where were we yesterday? We were around where was that? Okay, we were around the key level at the $85 mark yesterday, where we we continue to ride on that bullish momentum that we began the week with on Monday. So since the beginning of the week, we have continued to enjoy this bullish momentum as price has moved over how many pips now? Over 400 pips in profit since the beginning of the week. So for those who have been part of this bullish journey since the beginning of the week, kudos to you. Congratulations to you guys. And the next thing we want to be doing here is to move our stop loss accordingly to protect our position against any pullback. So with that being said, let's go into the higher time frame so that we can have an holistic view of what is really happening in the market right now. And this also will be a privilege for those who are not part of the session yesterday and the previous day, so that they can have a better understanding of how we got to the position we are right now. So moving on to the daily time frame here. Well, the first thing we observe on the daily time frame is that price action has been on a very strong bullish momentum since the beginning of the year. And as a result of this, we were able to identify that bullish trend line we can see on our screen after connecting the series of higher lows. And if we zoom into the current structure and look at what has been happening in the last 2 months, we can see that price before the 2 months, we saw this impulse, this bearish trend to the downside. So we were able to draw this bearish trend line connecting the series of higher lows here. And then the next thing we did here was to identify a very strong and significant key level at the $85 mark. And if we look at the key level at the $85 mark and compare it with what has been happening around this area in the past, we will observe that price has been respecting this area in one way or the other. Look at what happened in the month of August. Participants were here to buy the US oil, and the same thing happened during the early days of the month of September. However, the bullish momentum wasn't really that strong as we saw price break down that key level during the second week of the month of September, though we had price come back up a little bit, but it was met with stiff resistance from the sellers as price broke down that level finally during the mid-month of September. And since then, we started seeing multiple rejection of this key level, which pushed price right back into the $77 area. And since the later part of last week's trading session, we have seen a climb in price as price has continued to climb right back up. And what we saw here in the last 48 hours now is that we already have a breakout of the $85 mark. And one thing I want to say here is this $85 area is a very sensitive level, as we want to see how price action is going to relate with that level. So that's what we said yesterday, and lo and behold, we finally saw a breakout of that $85 mark with an engulfing candle. So right now, with the current structure we have here, everything on this chart right now is saying bullish. However, we need to be very careful as the structure around this bearish trend line needs to be monitored and studied very well so that we can have a better understanding. So what we want to do right now is to scale down to the 4 hours time frame. Before we do that, one thing I want us to know here is this: there is a possibility that we could have a reversal pattern here, multiple rejection resulting into a crash to the downside, or we could be having a breakout of this bearish trend line in such a way that a retest to structure will be giving us a confirmation that price is going to the upside. So we have two scenarios we're going to be looking at on the US oil here. As long as price is around that bearish trend line, which also shares a confluence with the $85 mark, we really need to be very, very careful. So going down to the 4 hours time frame, let's see what is really happening around that bearish trend line. So look at what is happening here on the 4 hours time frame. You can see as soon as price tested, though we had the breakout of the bullish trend line, should I shift these meters a little bit so that we can have a better view of what I'm talking about here? So let me shift this out a little bit. so that we can have a clue, a better visuals of what I'm talking about here. So look at what happened here. We saw the breakout of the key level at the $85 mark. Remember, the gold line here is the key level we identified on the daily time frame. And we saw the breakout of that key level with, in fact, an engulfing candle. We had two engulfing candles that took price right out of that structure. Now, as soon as price got to the area around the bearish trend line, which we identified on the daily time frame, we started seeing multiple rejection of the $87 mark, which resulted into a consolidation phase right now, as this could emphasize the indecision that is being in the market at this point in time. So with multiple rejection of the $87 mark, followed by a consolidation phase around this area, and also this structure here lines up with the bearish trend line we identified on the daily time frame. And one thing I told you on the daily time frame is that there is a likelihood that we could be having a reversal pattern within this area that will be crashing price to the downside, or we could be having a breakout of that structure that will be sending price to the upside at this point. So now, in order to get a better perspective into the current structure that we have here, one thing I did was to scale down to the 1 hour time frame. So on the 1 hour time frame, we are privileged enough to see how participants have been relating with the structure since the beginning of the trading session today. That is the London trading session. So we have seen how price has been relating to the structure. So what the first thing I did here was to identify the $87 mark, which is here, and we can see what has been happening since the later part of the New York session yesterday. We saw how this level has been consistently being rejected by the sellers. So every attempt by the buyers to push price right above the $87 mark has been met with stiff resistance from the sellers. So to continue buying the US oil, definitely we want to be seeing price break out of that $87 mark, hereby taking out all the sell position at this point, after which a retest of structure will be giving us a confirmation that price is going to the upside. However, looking at the multiple rejection of the $7 mark, I'm of the opinion that this might be the beginning of a retracement of this impulsive move that started this week. So remember, we had this impulsive move that started this week at around the $81 area, which pushed price right into the $87. So we had the US oil grow with about $7, $6 thereabout since the beginning of the week. And so since we had this impulsive move to the upside here, and we begin to see multiple rejection of the $87 mark, the question right now is that, is this consolidation phase going to evolve into a retracement into our golden zone area, where we shall be looking out for patterns to join the trend continuation to the upside? So this is what we want to be looking at during the New York session today. And in order to make our job easier here, what I did next was to identify a neckline of this multiple rejection of the structure. And we had a neckline sitting right around the $86 mark, as we can see here. Let me label this level for the sake of clarity. So we have the $86 level here. And so what this simply does is that it's going to be guiding our action as we head into the New York session today. So one thing we want to be looking out for here is, if we have a breakdown retest of the structure, then we might be having a counter trend opportunity that we could be taking advantage of. So if you are someone who feel comfortable in taking counter trend opportunity, well, this might be an opportunity you want to join. So now that we have this scenario here, so I said we want to see price break down the $86 level here, give us a signal, then a confirmation in the form of a retest structure is likely going to be pushing price to the downside. So right now, if price is going to be going to the downside, well, where will our take profit target be? Well, in order to get that, we need to take into consideration this impulsive move. So we had this impulsive move here. So what we want to do right now is to bring out our Fibonacci retracement tool, run it through the previous impulse leg here, And what we want to be doing is to aim at an area between the 50 and the 78.6% area as our take profit target zone, and at the same time a buy window for the second wave of the potential bullish momentum. So let's label this area for the sake of clarity. So we have a TP target here for sellers. So yes, for sellers, and at the same time we have a buy zone for the buyers. So we have the buy zone here as well. Let me place this right inside the rectangle. So we have this, and then we have this painted yellow. So let's delete the retracement tool right now. So we have an area between the $84 mark and the $82 area as an area where we want to be placing our take profit target if we are selling the US oil from this point. So in as much as we are selling here, we're still looking forward to a bullish momentum here. So what I'm saying here is that if price breaks down, retests the structure and goes into this area, we want to be looking for buying opportunity right around this area to join the potential rally to the upside. So remember, we had this bullish trend line that was holding price action since the beginning of the week. So there is a likelihood that we will be having a breakdown of that bullish trend line. And if this structure here evolves into a breakdown of the neckline and a further breakdown of this bullish trend line and retest of this bullish trend line, we'll be welcoming another opportunity to add more position to our existing trade. That is for the selling opportunity. But if you are not comfortable with taking advantage of selling momentum and counter trend opportunities, then you want to be patient enough to wait for price to come within the golden zone area here to join the potential second wave of that bullish momentum that began the week with. So this is how we intend to trade the US oil. And another caveat I want to emphasize here is the $87 mark around this area, which has been rejected since the later part of the New York session yesterday. So if we have a breakout of that $87 mark, a retest of structure which shares a confluence with that bullish trend line is likely going to be pushing price to the upside. So we need to be open-minded here, and let's see how price action is going to play out in the next couple of hours. So if you have any question whatsoever, feel free to drop in your comments, your inquiries in the comment section, and I'll be letting you know that I will try as much as possible to shed more light on whatever you really don't understand at this point. So that is that on the US oil. If